Should we buy or sell the Teladoc stock? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So we do actually have an ETF called Telemedicine and Digital Health, EDOC, 20% from the lows, minus 33-ish% away from the highs. Here is a theme in the megatrends called healthcare at home. Teladoc is here. It's external doctor. 22% from the low, but minus 79% away from the highs. Here is their website. The right care when you need it most. Talk to a doctor, therapist, or medical expert in anywhere you are by phone or video. Yeah, so we're here to help. Here you can see the different types of services. Also mental health. So they do have a bit of a broader portfolio. Tips to get care, answers, and advice faster. So let's jump into the charts. These are weekly data points, and we can see that there's been many opportunities when it comes to Teladoc. This rally here, as an example, was 847%. That's bullish, but if you didn't close out that position, you would have nothing. So it goes to show you that it's very important to actively manage positions. But it's also a bit strange. How can the market be that bullish only to become this bearish? It stands to reason that maybe the truth is somewhere in the middle. What is interesting from a technical standpoint is that we have fallen down to a horizontal support level. Does that mean that horizontal support is going to hold? No, but it means that the bulls now have an opportunity that they haven't had in a long time. We also have support here back in 2015. This is an opportunity for the bulls. If the bulls were to lose this level, that would be really bad. But I do think that the bulls, given the most recent price action, where you also have a bit of a double bottom pattern, it's interesting. It definitively is interesting. We do have resistance above us, the 20-day moving average in purple, green 50-day, and blue 100-day moving average. So there's a lot of resistance levels. Then again, we have gone from clear downtrend to now moving more sideways. So if we just draw it in quickly, obviously bearish, not so obviously bearish. If anything, you might start to play with the blue color and think that maybe a low is forming here for Teladoc. Because if you put yourself in the mindset of being a bear, if you are shorting Teladoc and you look at the history, is this a safe stock to short? I wouldn't say so. The risk reward here is pretty bad from a short seller perspective. If the bulls only get up here, that would mean 129%. And to get up to these highs would be 800+%. So it's starting to become very dangerous to be short Teladoc. Just a bit of a good news here could be just a massive short squeeze. Yeah, looking at these other indicators, accumulation distribution is actually looking pretty healthy. RSI is a bit in a messy territory. So in my notes, I write that the entry signal stop loss is horizontal support, and we do have a double bottom. I will rate the technicals of 5 here for the bulls, but obviously that is very much contingent on these signals holding. If we were to lose it, obviously that would not be bullish. So let's look at the seasonality. So here to the right, over the last 5 years in green, it's a bit bullish to the 19th-ish of September, but then we do see some weakness into later October. To the left here, yeah, if we look at the last 5 years, September is actually one of the strongest months for Teladoc. Closes higher 80% of the time. Looking at the last 8 years, September it's a decent month. October is weak, but November is one of the strongest months. So in terms of looking at it from a bearish perspective, if I was short Teladoc and I see that September and November is very strong, It's not that favorable to be a bear though. So even though, yes, October is weak, which is beneficial to the bears, having November as one of the strongest months is not good. So I will give the seasonality here to the bulls. I give the bulls a 3, but the seasonality is definitively a bit, messy. So let's look at the fundamentals. So here is a SAX, number 3 hold, but we have C value, A growth, and C momentum. And this is, a health tech stock. So these style scores are hence very good. Industry rank, bottom 39%, medical services. The market cap is 5.4 billion US dollars, no dividend. If you look here at insider activity, it's not that bullish because the latest moves are selling. Sell, 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 sell. So that's not good. Looking at the consensus estimates, we see that 30 analysts are covering the stock. The average price target is 12% above us. Highest is 94% above us, while the lowest is minus 25% below. I think I will give the bulls a 4 here on the fundamentals. These are pretty good numbers given how, this is a high-tech space. Definitively not, a consumer staple. So here we are looking at relative performance. Correlations here with the S&P 500 is at minus 23%. Minus 32% long-term with the healthcare ETF XLV, minus 12% with the tech ETF XLK. Looking at short-term correlations, 85% with S&P 500, 56% with healthcare, 83% with tech, and 93% with the EDOC, and that is the telehealth, health tech ETF. Hence, what happens with EDOC is definitively going to have an effect on Teladoc. So here is the chart. We definitively have a downtrend very much in place here. Let's look quickly at the daily data points. So what I find interesting here about the dailies is this blue 100-day moving average. We have recently been playing around above it, which is bullish because it used to be a level where bullish moves failed. As such, it's psychologically very important now to really turn it into like a level where the bulls just systematically are above it, because that means that the bears, they just can't short that moving average, at least now. And if the bears lose levels to short, it means that the selling pressure is going to go down. So there is some constructive action here for the ETF, even though it clearly is not. It's not like a roaringly bullish setup, but there's something bullish-ish emerging. So let's look at these other indicators. So RSI is weekly RSI and also the 20-week PPO in purple. It's in a territory that has resulted in pullbacks in the past. If you go here to the daily data points, the rallies usually go a bit higher. As you can see, the upper end of RSI has been a major trouble zone, very shortable, but we aren't there yet. Hence, the bulls, they could push a bit more. Here is the relationship between Teladoc and the EDOC ETF. Yeah, we do have lower highs and lower lows. We just do. There is something a bit flourish happening here, but given that this low here is below the previous ones, the downtrend is very much in development still. So we don't really have that. It's not a clean floor being built yet. If we go here and look, I don't think we get anything, no. I think we could quickly maybe look a bit at the Teladoc, against the EDOC, EDOC against the XLV. So in this case, there's been some outperformance from telehealth recently. You do see that RSI is establishing a higher level, so we do have a bit of a breakout from a very low level. So it's interesting that a new range is building. If we go here to the daily data points, Let me just draw it in. There is something a bit rounding-ish, bottom-ish here. It's a bit constructive, a bit, so not roaringly bullish, but yeah, there is definitely something afoot here that the bulls could utilize. We do end up with a 3.8 in favor of the bulls. The entry signal stop loss is that we are at horizontal support, very long-term horizontal support for Teladoc Health. We also have the double bottom. Looking at the ETF, there is some constructive actioning happening at these levels. So yeah, overall, it's more bullish than bearish. So we have some time left. So let's look at some stocks inside the EDOC ETF. So now we will run through some of the charts. First on the list is Massimo Corporation. There is the potentiality here of a bit of a breakout. So let me just draw it in around this territory. It's a bit breakout-ish. If we look here at the RSI and the PPO, there could be a bit more left here in this rally. So there is the possibility here of a nice breakout. If we go here to the daily data points, we see something a bit similar. Also here on the MACD, we are very close to getting a buy signal. So those who trade the MACD will then flush into the stock as well. So it's a bit of an interesting setup. We do definitively see a floor being built here. Yeah, this is rather constructive action. Here is iRhythm Technologies, also a bit of a breakout-ish pattern. In this case, this is a very mature breakout, because if you measure here from these lows, the bulls have already gained 260%, like there, and if we were to make a new all-time high from the current level, that would only quote-unquote be 79%. But if you got in here at the low down here, you would instead, to the same level, have 542%. So it goes to show you why it's very beneficial to get in early, even though the risk is definitively higher. Because if those wins you do get, from those very ballsy moves are going to be very substantial. Those gains are big. So looking at RSI here and also the PPOs on the weeklies and the dailies, I mean, there could be more left here. We are not at levels yet that are like very dangerous to the bulls. So yeah, iRhythm is definitively also one to have on your radar, but in this case, the bullish move is rather mature. Here is Agilent Technologies. In this case, we are playing around with a very important moving average. The green 50-week moving average. It was support, but it is currently definitively very much so a resistance level. So the green 50-week is in play. We are peaking a bit above it. If we go here to the daily data points, you see here that the red 200 daily moving average was a support, became a resistance, but now we have a breakout. So in Agilent as well, we do see some constructive action. Let's look here. We do have a MACD buy signal. RSI and PPOs are not yet in high danger territory. So there could be more left in the rally. Here is a Change Healthcare. This is definitively a new all-time high, definitively bullish, but it's bullish for those who already are in the position. Like if you don't have any position on Change Healthcare, yes, the bulls are in control, but you start at 0. So I'm not really a huge fan of buying into a new all-time high. We have seen a breakout here. So there's definitively are a constructive action here for Change Healthcare. Looking at the weekly data points, the weekly RSI is in high danger territory. It is high danger in the sense that ever since early 2021, the current RSI level has been a failed level. Looking at the daily data points, also it is possible for the RSI to get higher. The issue is that when we go back here to June of 2021, this has been a high risk RSI level. Doesn't mean we can't go higher. It's just that if you don't already have a position, there's danger. It's sort of like if you have a ski jumper that has a certain top, that he hasn't gone above. You wouldn't take a huge bet that he's going to set a new record, if there's a certain established ceiling on the score. So yeah, definitively some interesting patterns in play here for the Teladoc, DTF, and the underlying stocks.